Good afternoon, everyone. Today is October 7th. This is Brad Matheny. Let's get started with the 5-minute market update. I'm going to change things up a bit, and I'm going to show you a couple of these custom index charts. This is the consumer index, custom consumer index chart that I use. This shows me that consumers started re-engaging over the past 4 months, roughly, since the June deep lows, and have really stalled out here in early October. We could see this rally above this purple line and attempt to move back above this red line here if the consumers really, or if consumers across the globe start to shift focus away from what the Fed is doing, if the Fed, of course, pivots. And this could prompt a really strong end-of-year rally carrying into Q1 2023, possibly even further. Be aware that we're getting early warning signs that the market is attempting to struggle to form a bottom, and the weakness we've seen over the past 3, 4, 5 weeks really may be a bit of an exhaustion bottom. Now let's take a look at the next chart, which is the U.S. to global market index. The blue is the U.S. market index, and the red is the custom global market index. Custom global market index is trading way down near these COVID lows, way over here. Extreme deep selling. The U.S. market index in blue is holding up above the COVID highs. We're starting to see some real bottoming here. Now, I think this low back here off these COVID lows is very, very important for the global markets. This is extended unwinding. The U.S. markets have unwound, but they've unwound to the COVID highs. So these are 2019 highs. If we did see a deeper move to the downside, I think it could be very short, maybe 7, 10, 11% to the downside, deep downside move, and then some sort of recovery. Same thing in the U.S. market. These U.S. highs back here and back over here around the election are very prominent price support. So we could see potentially a 7, 10% downside move in the U.S., maybe a 7 to 14% downside move in the global markets, and then I think we'd be at a really solid market bottom. Lastly, I want to show you here the Fangs Index. Fangs Index has moved into a very solid support channel off of this green standard deviation. To me, this is setting up a very solid bottom. It looks like it's unwound almost completely, starting to form like an inverted hammer type shape. A long-legged doji. We've got deep selling after this little rebound. I'm starting to become very cautious of a recovery phase rally, which may start in October, November, December. And I really think that technology and semiconductors and certain innovation sectors might do very well. So be aware that we're at an early kind of a bottoming formation, but we could see a bit of a blip lower. Let's call it a little bit of a washout low, kind of like what happened over here in COVID and back down here in this area. And the washout low would likely be down in this lower blue area here, forming some sort of a deep base and then recovering back up and then starting to move higher. So now understand that we're still in this is a weekly S&P chart, and I'm going to try to hurry up here. But understand that we're still holding up near these lows. This broader support channel right here, ladies and gentlemen, where you see this lower range. Let me get it. There we go. Sorry, my chart was a little slow loading. This lower range right in here is very, very critical for what we're trying to extend forward. We've had an extended formation of an excess phase peak pattern. We've come back down here. We're retesting these lows. We're trying to find support. Next week and the following week are going to be very important to see how the economy is holding up, whether we're able to climb back up into the 39, 30, 38, 90 roughly area on the S&P, because I think if we do climb back above this level, we might start to see some momentum and we might start to see a Fed shift. Now, not necessarily will the Fed pause or revert to lowering rates, but I think at this point the Fed might move to a smaller rate increase, a 1/4 or a 0.5% rate increase. Now let's take a look at the NASDAQ. The NASDAQ has moved again into a similar type of pattern. We've got a doji formation here on this weekly formation, Very solid kind of a bottoming formation. It is a deeper low here. We're looking for a potential support here. My custom charts are showing that we're getting very, very close to what I might call a momentum base type of pattern, and I see that fear is starting to drive gold and silver a bit higher. I think that's going to continue to move higher. But we do need to see this support level hold. If we don't, like I mentioned to you, a 7 to 10% downside move is likely in the NASDAQ. And real quickly, I'm going to try to draw this line, get the percentages up real quick. There we go, percent distance. And so there's a 12% move. This would be essentially a 10%, 10, 11% move. We could see it blip down in this area, fake everybody out, and then roll back to the upside, back up into this area, which would essentially be a 20% recovery. And I think that's very likely moving into the end of the year. Let's take a look at the IYT, which is the transportation index. We had talked about how we had this kind of an inverted head and shoulders formation a while back. We're now down at deeper lows. Something I want you to be aware of is we've had this wave 1 move here, this wave 2 move here, and now a wave 3 move here, just to see if we are close to anything related to 100% or an extensive move. This is obviously deeper than this move, so I will get rid of that and get rid of this and get rid of this. And let's go ahead and check this one. What I'm doing here, ladies and gentlemen, is I'm trying to see if we've had a measured move equal. Nope, not yet. So if we were to take a look at this and try to extend this from this peak to this low, and now let's see if I can move this. Yep, I can. And we're looking at about 100 and do the math real quick, about 130% retracement or extension move here of this last move, and that is going to be about a 61.8% move here. So we could be very, very close to, and I want you to understand what I was trying to do in that scenario is try to coordinate the expansion here. This is a wave 1, this is a wave 3, this is a wave 5. Wave 3 should be the biggest. Wave 5 can typically be as big or smaller or bigger than wave 3. Wave 5 could be bigger than wave 3 on an extensive move. But the way this is setting up right now, ladies and gentlemen, we're getting a fairly solid, in fact, I should be able to show it to you here. If we were to come from here to here and back up to here, you can see that we've already reached the 618 retracement level. This is actually from this level here to this level here acts as a double bottom. A full 100% extension would be to move to here. But if we were to come in this area, draw the same range from here to here, and then attempt to find the 618 range, which would be approximately here, I believe, and drag this down to here. This is what I'm trying to show you, is that this move, let me try this one more time, and I apologize, I'm trying to cram quite a bit into this a little bit extended 5-minute video, but there's our bottom. There's our 618 move from this extension. So if you take a look at this move and expect this to be approximately 618 or a little bit over, we should be looking for a bottom right in this area. Right in this area, roughly. This should be our bottom for the transportation index. And if that is the case, and we start to see an upward movement, then what we're going to see is we're going to probably see an upward move that extends back into this apex. So it's likely going to be something along the lines of up back into here, trying to consolidate, and then maybe up into here. which would essentially be an end-of-year rally of approximately, on the transportation index, somewhere between, and let me just draw this, and I apologize. Like I said, I try to cram so much into these videos that 5 minutes is almost impossible. But real quickly, that would be a 15 to 22 to 25% rally up to these highs. Okay, let's leave it here. Oh, one last thing. Let's take a look at Bitcoin. Bitcoin is still attempting to move higher. It's down in the $20,000 range, 19,000. Oh, I'm not entitled. I made a change to my e-signal. I'll take a look at this GBTC. So Bitcoin is holding up and basing and bottoming. I would expect still a recovery. If the markets do recover, I would expect this move back up here from 11 to roughly 25. That's a 100% move. It's going to give us a good opportunity here when this market settles. And it looks like the markets are about 2 to 3 weeks away from settling. So again, this is a little over 5 minutes. Follow my research. Pay attention to what I'm doing. And I'm going to put up a new video highlighting the strength of my TT Scanner hot list. They have been incredible. If you've been looking for great triggers and great setups, boy, have they really been incredible the last couple of weeks. All right, guys. Talk to you later.